Welcome to SMB's daily video. Today, I want to give you a phrase, and that phrase is win percent is overrated. Most beginners I talk to feel that they're on this quest to be right very often, and that's how they're going to make money. Okay? Myself and pretty much everyone around here would disagree with that. We feel like putting risk reward in your favor is really the most important thing you can do as a trader. And what do I exactly mean by that, just for some of you? That means when I have a trade idea, I'm willing to risk this much for the potential of earning this much, right? And I have a very sloppy, messy, potentially frustrating, for some of you, day of my own personal trading that I'd like to share with you today. And I hope you find it inspiring, and I hope it hammers home the point that win percent really is overrated. So let's pull up the chart here. And this is crude oil intraday. And as you can see, there's 8 numbers on the chart for 8 trades that I took. I essentially went 1 for 8 on the day. And I made really good money that day. How was I able to do that? Well, there's one skill set that I'd like to talk to you about, and that is reading the tape. That is short-term order flow. It's super, super important. And why is it important? What does it allow you to do? If you can read where sellers are drying up, where buyers are starting to step in, that allows you to initiate trades at turning points in the market, which therefore allow you to put small risk, because you know exactly where you're wrong if that buyer does not continue to lift from this area, and bigger reward based on the normal even rotations of the market. So this is a tremendous skill set that I really encourage you to take the time and effort to grow and build up. So looking at the trades here, trade 1 right off the open, got in on a turning point, went in my favor as you can see, but then didn't follow through and came back, okay? Same with trade 2, trades 3 and 4, didn't really go anywhere, but I identified a buyer that was supporting and holding an area. 5, that was a trade I reviewed most my decision that day. It wasn't an error, but because we got above the previous day's high, and again, I identified a buyer that started to hold that area. And again, took tiny loss as that trade proved to be wrong. 6, 7, again, identified places where we were attempting to lift and took paper cuts along the way. Trade 8, as you can see, came down into a great structural area, used the same concept. And actually, let me pause right there. Notice the frequency of trades 1 through 7, and then notice the time between trades 7 and 8. I identified through reading the tape that the sellers were very much in control and that I needed to put the brakes on my long attempts until I could identify a change in that tape. And I identified that at 8, and as you can see, had just a very, very large winner. So let's actually look at another graph right quick. And this graph is going to show you just a really cool analytics tool that I use. And it shows you each one of these bars, however high it went, whether it's a wick kind of up, you know how to read candlesticks, that's how far the trade ever went in my favor. We call that max favorable excursion. However far it went down is max adverse excursion. How far the trade ever went against me while I was holding it. Whether the bar closes as a bull candle or bear candle simply shows me where I closed out the trade, where my P&L was within that landscape of how far did it go for me or against me, and where did I close it out during that time. So as you can see, trade 1, 2, 3, 4, 5, 6, 7, I'm really not getting anything. But take a look at this in terms of these horizontal lines and units of risk and reward, and have a look at trade 8. It is a beautiful thing. Essentially went 0 for 7. I know one of them was a small winner, but really, not going tremendously in my favor. 0 for 7, then 1 for 8, and have a monster winning day, multiple units of risk achieved. Almost seven times what the average loser would be for me. So really, really fantastic there. And I encourage you to use this tool to analyze your own risk reward that you're achieving on your trades. So again, Trade 8 here, get in a great location. The blue circles show you where I decided to start taking size off and taking profits. This is one of my best trades here. I found a way to get bigger. I added into another pullback area, as you can see, and then scaled out of that size as we pushed again into the previous day's high. And I identified that sellers were starting to take over there again, and we're headed towards the close, nothing really doing. So I got small and then closed out the final piece into the close. Again, win percent is overrated. Learn to read order flow, learn to put risk reward in your favor.